This is Alan Bush with the Daily Financial Forecast for September 6th. In the stock index futures, we are seeing a little pressure developing this after one U.S. economic report coming in a bit on the weak side. However, we did see some strength in the overnight trade on the growing belief that the Fed may be slow to raise interest rates. So even though the S&P just a little bit lower now, I think there's a very good chance that we can see a recovery in futures trading higher later today. Also, in the long-term view, we still believe that the main trend is higher across the board for all of the major stock index futures. Now, moving over to the currencies, the dollar index coming under some pressure. As we said, one U.S. economic report coming in on the weak side. Also, we had the euro currency trading higher, even though we did have some negative economic numbers coming out of the Eurozone, particularly in German economic data coming in a bit on the weak side. So the euro currency ignoring some negative news. Also seeing the Swiss franc advancing after the Swiss GDP coming in up 0.6% in the second quarter. That was a bit better than the estimate of up 0.4%. And the Australian dollar trading higher after the Reserve Bank of Australia keeping rates unchanged and offering no indication that they are in any hurry to lower their key lending rate any further. They're right now at a record low 1.5%. So no indication of more easing from the RBA supporting the Australian dollar. Even though the crude oil market is lower now, the Australian dollar performing extremely well. In the interest rate futures markets, once again, we are seeing the September 30-year bonds bouncing off of the 170 support area. However, we feel that the more times that this support holds, the more likely there will be sell stops from a technical point of view under the 170 level. Even though now that it does look like the Fed will be slow to raise interest rates, of course, that is a bit of a bullish factor. Ultimately, we feel that the interest rate markets will be adversely affected by the inflation levels, which we believe, although very slow, light right now and not really advancing much currently, that ultimately there will be some increases that will accelerate as far as the global inflation picture appears. So that will be the dominant influence that will take the credit markets lower, especially at the long end. So we do believe that the 170 level in the September bonds will be taken out within the next couple of weeks. And also moving to the precious metals, both gold and silver now advancing above a series of downtrend lines. So that has to be viewed as a sign of strength. So we still feel that gold and silver are in the early stages of a multi-year bull market. So any weakness in both of those metals should be used as a buying opportunity. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.